Good morning, good evening, wherever you are in the world. Where I am, it's the 27th of March, Wednesday. Wow, nearly at the end of the quarter. Okay, so dollar index chart, yes, one big sideways trend. You know what I think of that, driving me nuts. I want a trend to follow for more than a week. We've got tangled up now in the moving averages at the midpoint, not really a surprise. If we can hold above, we've got a little peak here at 96.57. 96.62, and we are holding above there, so I guess this is bullish at the moment. We're above the moving average. We're just trying to break above the moving averages anyway, and we even tried to beat last week's peak at 96.80 as we get to 96.84. So yeah, it looks pretty positive, I think, for the dollar for now, as long as we can hold above, say, 96.55, which is the 100-day moving average. And if we start to trade below 96.40, that should look more negative. Who knows, maybe we can push up to the 97.50, 97.70 resistance area, and we'll see if we turn around from there in true sideways trending style. There's nothing to show you in the Aussie dollar, but the New Zealand dollar is a bit more interesting. So we've got a trend line going back to June last year, which, as you can see, cuts the peaks in December and January, and we are testing that now. Now, the last time we tested it, well, last week in fact, we spiked up and reversed below. So there is someone up there wants to sell it for sure. Now, we're testing it again. So we're at what you could certainly call is a critical point as we test the trend line, and it's also the 50% fib, so it's not insignificant. Now, we're not particularly overbought, so that's not a negative factor, but when you look at the weekly chart, we are reminded that not only do we have the trend line going back to June, but we've also got the 200-week moving average. So the resistance is stacking up, and for sure this is going to be an important point. So we got to 96.24 yesterday. We've backed 69.24 rather. We backed away. That, you know, anything up to 69.30 is resistance, and what the heck, there aren't that many trading opportunities at the moment in this sideways trending market, so we might as well give it a shot and try and sell it. It's pretty low risk. We could put a stop above 69.45 at least. Give it at least 10 pips. I mean, we should really give it more. What peaks have we got up here? Same 69.38. That's interesting. Okay, so bulls will really need a break above 69.70 if they want to consider this to be a breakout. So this is where you'd want to be reversing. Well, actually, look at this. We've got the 100-week moving average 69.80. So 69.70, 69.80 is the level to beat, really. If you can sell it in the around 69.30 with a stop above 69.80, that would be the best trade, because we've got the 500-day moving average up here at 69.80 as well. How would I play this? Let me think. I think I'd sell it 69.20, 69.30, stop at 69.45, and then maybe look to short again up around 69.80. I've got to keep it tight at the moment. You can't really have 60, 70 pip stops, because the chances of you making that sort of money are not realistic in this market when things are moving as little as, well, look at that, 50 pips a day, 40 pips a day. Or even less, 35 pips on that day. So really, yeah, I think that's the best strategy. Sell at 69.20, 69.30, stop at 69.45, and then we can look to try a short again around 69.70, 69.75, 69.80. And if we break above that, then we have a longer term buy signal, and we're looking at a significantly weaker dollar. But I'd need to see the dollar break below, the dollar index break that support of the triangle that we have there. So anyway, that all ties in. That's my suggestion for the day. Dollar yen, I've got to talk about it because it's such a significant pair, but it's very difficult to trade at the moment. I think I had yesterday strong resistance at 110.65.70, so that certainly worked. But right now, I wouldn't be surprised to see it continue higher, or today at least, I wouldn't be surprised to see it break above that level and get up towards 110.90. Look, 110.90 is the 500-day moving average. 111.10 is the 100-day moving average. So this has to be the important level of the day. I know it's a 20 pip wide range, which isn't particularly great. We've got good resistance up here at 111.40, which if we made it to this week, I would certainly try a short with a stop above this peak. What is this peak? Let me try and figure that one out. 111.70. That's a reasonable trade, isn't it? But we're not there yet. Okay, the euro yen, we've talked about the 500-day moving average, 500-week moving average over and over again, and that really that was tested last week and it held 123.90. The low was 123.87. So we're bouncing off there. I think that's all that matters in the the euro yen. Sorry, the euro yen. There's nothing. This weekly chart is just a nothingness as we've traded sideways for so long. And even on the short-term charts, I just don't see anything. So if we were to retest 124.00, 123.80, call it, then it's worth a long, and we want to be stopping out on a break below, say, 123.60. Yeah, that should give it enough room. A break below 123.60 should be a sell signal. Obviously, we need to break below 123.40, 123.35 for the next sell signal. That's the lows of these two little weekly candles. It's the weekly chart, which is probably the more important one for the euro as well, which is also in a sideways trend. It's the 200-week moving average, which seems to be doing all the work. As you can see, it did act as good support, at least on a closing basis in November and December. And then January, it certainly acted as good support. And then once we broke down, well, you can see these candles either side of it. But look at on a closing and opening basis, it really has worked. Okay. So this week we've peaked at 13.32. I think I had a sell at 13.35, 13.45 yesterday in my report. So we missed that, I think, by 3 pips, which is really annoying. Where did we get to? Sorry, that was the day before yesterday. Yesterday we got up to 13.27. Okay, so we didn't quite make my sell target. Maybe that was just a little bit too high. Anyway, we've come down now. So for the time being, the outlook is negative. Where did we get down to? 112.60. Maybe we'll come down to 112.10 and test this lower Bollinger Band. I really can't get excited about this chart, though. It really isn't telling me to do anything, if I'm honest. Okay, the US dollar versus the Canadian dollar, as we know, is in a bull trend, has been for over a year. So, with that in mind, with the idea that we stick with the trend, this is less clear on the daily chart, a lot less clearer. I think we've really got to zoom in here. We're seeing an uptrending channel for the last month. And the fact that we held the 100-day moving average is positive. Now, doesn't mean we can't dip back down and test this level, but the only level I see that's worth trading would be around the 133.15, 133.05. So we've got the 100-day moving average, and then we've got this little trend line, not particularly significant because it's only 3.5 weeks old, but it'll have to do. So yeah, around the 133.15, 133.10 area would be a good buy level. It looks like we're so far away from it on this chart, but in fact we're only, what is it, 60 pips or so, 65 pips away because we move so little that these distances seem so much. But it's only 65 pips away. Wish we could do that in a day or two. I would stop below this little trend line here, which is 132.77 at the moment. So maybe we'll stop below 132.70. Yes, it's quite a wide stop, 40 pips. If you wanted to fine tune that, you could stop below 90 and then see what happens at this support level. That might be a better solution if you're feeling nimble. Gold is usually one of my favorite markets, but I've got to admit I'm having trouble with it now. So we've had a good run up. Some of the levels have worked recently, but right now I'm confused. We seem to have rejected the upper Bollinger Band. We didn't quite make it, as you can see, but yesterday we turned lower. I'm not really sure why we did that. We've got a little trend line down here at 13.10. So 13.10, 13.09, which has been a level anyway, as you will remember. Below 13.07 is going to look more negative. The 13.03, 13.02 level certainly worked last week. We were buying it down here on this little candle. So it should be significant again on the way down. A break below 12.98 is going to be more negative. Those are the levels that I can give you to trade, to watch. If we head higher, we've obviously got the recovery peak of 13.24, 13.25, and then we've got a little trend line. Oh, that's not particularly significant. I wouldn't be selling it there. The trend line is around 13.27, 13.28. So we've got to really start moving above this trend line for the next leg higher. Tricky one. I don't really know what's going to happen with gold. The weekly chart isn't really telling me anything either. I mean, in effect, this is one big sideways trend, isn't it? although we have had some decent moves and we've caught a lot of those decent moves. I'm going to finish up with the S&P. For some reason, I think this is going lower, but I can't give you a good reason why. I've sold a little bit, more as a punt than anything, and I don't like to punt. I certainly don't like to recommend punts to my subscribers, but I don't know, for some reason I feel this is going lower. We got a negative candle last week, the spike up, the lower close, shooting star, that is a little bit negative. I'm just wondering if this is the start of a new channel. So this is the upper channel, upper trend line channel. This is the lower one. I'm just wondering. I'm speculating. I don't have a lot to base it on. We are a little bit overbought on the weekly chart. I know that some of the economic numbers are negative, and everyone's talking about this yield curve signaling potential recession. We did reject this trend line here going back to middle of January. You can see we tested it and rejected it. Okay, that's minor negative. We seem to be holding the midpoint of the Bollinger Band at 2804, 2803. So we've got obvious resistance up at around 2860, 65. We need to get below 2790 for something more negative. But we do have a lot of good support down here at 2757, 47. So that's a reasonable enough target. I don't see that breaking at the moment. I don't know. I just feel that this could drift lower. As I say, nothing solid, but it's more of a gut feeling than anything based on technical analysis. Quick one about Bitcoin. I know most of you have stopped trading it, but I did warn about strong resistance around 4100, 4150, and we certainly rejected that and the trend line and everything else. I don't need to go over it again. Look how we've now broken below this sort of 6-week trend line with a very negative candle yesterday. We've had a little bounce back. But this does look negative for Bitcoin. So if you did give it a little short on my article last week, you're making some money. If you didn't and you fancy a little punt, it could be worth shorting Bitcoin again. It really hasn't managed to recover much at all. The bull's just absolute full of bull. Always talking this rubbish up, especially that idiot Tom Lee. You know what I think of him if you're a Twitter follower. So let's see if this drifts lower, at least to the 100-day moving average down here at around 3,800. And if we break below that, it's goodbye Bitcoin.